Hey traders, just want to take a quick look at silver, which is prime for the watch list. As you can see here, the precious white metal has not really done that much for the past, well, for the past 5 years. It's been moving sideways and has really not given us that many opportunities in the way of a trend-based trade, given its sideways moving motion. However, we do have a potential setup in the offing, which could, well, hopefully coincide with July. Which is historically a bullish time of year for silver. So let's take a look at this precious white metal in context. Let's see, all the way from 2009, silver has not been below $14 an ounce since before 2009. So this level is a 10-year level. Now, it's a very big level, and levels do have memory. So we can reasonably say that based on the fact that we've had 1, 2, 3, 4 tests against this horizontal level of support, also known as a level of demand to supply and demand traders, then we can reasonably expect to what has happened before to happen again. So as you can see, all the way back in 2015, when price tested this level here, representing $14 an ounce, it went up. Happened again, although a little bit more reluctantly, in 2015. And certainly more recently in 2018, and of course towards the fourth quarter in 2018, we had this move to the upside. Could it happen again? Well, based on what we've seen before, it's likely it can happen again. Of course, nothing is ever guaranteed when it comes to trading, especially reversal trading. So what we're waiting for is simply for price to come down to this horizontal level and for us to speculate that it could potentially go up again. We could even see this formation here turn into a W-shaped reversal with a higher low bullish pin bar reversal forming around about here. However, what we're waiting for first is for price to simply test this level, as it's been so well tested before, and it's seemingly been a barrier obstructing price from going down. So how are we going to play this one? Well, what we're simply going to do is place a buy order on this horizontal level here with a stop loss below a point where price has broken out before. So if we have our buy order on the level, maybe just above $14, just in case we do get that kind of like whiplash movement and we're not filled, then we can have our stop loss round about here, because we can see that price has been below this level. It may have not closed below it, but it's closed above it and it's spiked below it. So it would make a lot of sense to simply place your stop loss below the point where price has faked out before. So if we do put that in place, we can just do a bit of a profit shooter and see exactly. So if we have our stop loss around about here at a pretty safe location, remember that the wider the distance between your entry and your stop loss, the more profit potential you've got. Of course, the risk to that is, of course, there's a heightened chance of you getting stopped out of the position. So if we are filled in this position and the market does turn around, then what we're going to aim for first is a 1-to-1, i.e. sell half our position. We call it scaling out, so that we've got a break-even trade, and we've managed to take profit off the table essentially. And then we'll look to target the previous swing high here, and we'll scale out again if, as and when price does get up that high. And if it does, that would be fantastic, because it means that we could potentially see a W-shaped formation here, i.e. a reversal pattern. So ultimately, we'd look to take price after scaling out and adjusting our stop loss, of course, to these new highs. Okay, maybe just below it a bit. We'll be scaling out along the way, but you can see that reward risk is pretty good. Obviously, the bigger the distance between your entry price and your second, third, or fourth targets, the likelihood is going to be greatly diminished, given that higher probability, low reward trades have a far, like I mentioned, higher probability than trades with enormous reward potential. The relative probability in them reaching that target is going to be comparatively low. Alright, so that's how we're going to trade it. We're going to simply have an order on this horizontal level, a stop loss in a safe place below it, below where price has faked out before. Of course, if you want that ultimate kind of confirmation in terms of price, confirming that we could be seeing bulls coming into the market, then you could wait for a bullish pin bar reversal, ideally with the tail below this level and the open and close above it, signifying a false breakout. Okay, so that's our view on silver. We're going to be waiting very patiently for it. Happy trading, folks.